All right, good evening, everybody. Happy Sunday to you all. So, how was the weekend? Hope we all enjoyed our weekends. So, yesterday we talked about some things about support and resistance. So, on Friday we talked about support and resistance in the horizontal zone. So, yesterday we talked about support and resistance using the trend line. So who can quickly give me a recap of what we did yesterday? A quick recap so we can proceed. A quick recap, please. Anybody?
Okay, good evening.
Yeah, good evening, sir.
So, we talked about support and resistance from the previous class, but like last for yesterday's class, we majored mostly on trend lines.
Yeah,
So we talked about like what would make what would make a trend line valid. Talk about like for your strategy that it must touch at least 2 points for the trend line to be valid.
yeah,
And you also like corrected me on the fact that support and resistance is not a price, but rather is a zone
yeah.
on the chart.
I'm,
Um,
I'm impressed. I'm
okay, and
impressed.
we also talked about that. Okay,
Go on, go on.
actually, I will stop there.
Yeah,
Okay, we also talked about that. For to we're talking about something that trend like the trend line support and resistance, something like that, that they usually work mostly in a moving market. That's it,
yes,
an uptrend or a downtrend.
yeah,
That it really doesn't like it would like doesn't really have effect when the market is not really moving. That's like consolidating, something like that.
yeah. I'm so much impressed. That's very, very good. That's very, very nice. Okay, yeah. So now that
Yeah.
we've talked
So
about,
that's just like a little recap of what we did yesterday.
yeah, sure, absolutely. So now that you guys now that someone have explained what we talked about yesterday. So today we'll be doing something slightly different. Yeah. Now, when trading, basically what we'll be talking about today is psychological level and what is it called? And Fibonacci. Then we'll talk a little about supply and demand. You understand? So I told you guys the class is coming to an end gradually. So in the next week, the free class will end. Then I'll start the advanced class. You understand? So now, when trading the forex market, we are just traders. We need tools. We need equipment to trade. You understand? We need things that will help us so that okay, when price reaches this zone, price will price has the probability to reverse. You understand? Now, first of all, I will explain what I mean by Fibonacci. So Fibonacci is a tool, like is a very, very powerful tool. Very, very, very powerful. I hope you guys can see my screen, please. I hope you guys can see my screen.
Yeah, yes.
All right. So as I was saying, Fibonacci is a very powerful tool. Like many traders don't use it to joke, like they don't joke with it. Or let me say some traders they trade using just Fibonacci. You understand? So there are some traders like that. So that's to tell you how powerful it is. So now imagine combining Fibonacci and support and resistance. That would be a sweet, like a sweet stuff. So now let me show you what I mean by Fibonacci. So if you go to your MetaTrader 4 or MetaTrader 5 mobile, if you click on that, um when we talked about MetaTrader 4 and 5 in that class, I showed you something that if you want to add a tool like trend line, blah blah blah, that you will see something like all this triangle, rectangle. So if you click on it, you see your Fibonacci option there. Just keep scrolling, you see it there. So now let me show you my Fibonacci right here. So this is it. This is my Fibonacci. So this is what we call Fibonacci. So now you can see there is 0.0 level, 2 points, 23 level and the likes. Okay, so as you can see, there's different levels on the Fibonacci. Basically, there are different levels. So there is the 50.0 level, 38.2, 61.8, 100 level, 161.8, 261.8. So if you are checking your MetaTrader 5 and you can't find your Fibonacci, just click on add objects, then you scroll down, you see your Fibonacci there. So this is the Fibonacci. This is basically how it looks like. Now let me explain how to use it. So basically, Fibonacci is a tool that gives us like heads up on when the market will reverse, or let me say where we should be anticipating a reversal, or let me say a pullback. Let's say for instance, market is in an uptrend. I want to calculate like which zone should we be expecting where price will actually reverse, or let me say where there will be pullback, so we can trade that zone. You understand? Now I will explain what I mean by that and how to use the Fibonacci. So there are two basically there are two ways to use your Fibonacci based on what I've seen so far. I don't know, there might be some other strategy of some people using it, but basically what I've been seeing, like, and the ideal way of using Fibonacci is the two methods I'll be explaining right now. So now, if you bring your Fibonacci right here, so the first method of using your Fibonacci is by using it on the recent low and recent high. What do I mean by that? Now, this is the recent high here. This is the recent low. If you pull your Fibonacci from here, from this top here, let me move it. Okay. If you move it, this 100%, if it is at this top, and this 0% is at this bottom right here, let's do it shadow to shadow. What I mean by shadow to shadow is like the last week at the top, the last week at the bottom. Now you can see something is popping right here. Something is happening. So this is the recent high, this is the recent low. When I put my Fibonacci from this top to this bottom, this is just a random trade I'm talking about now. When price entered, like, let's imagine that this other part is not there. We are waiting for price to, basically, many traders wait for the Fibonacci zone to reach the 50% level or 61% level. So that is what many traders do. It just depends on you, and it depends on how you backtest. So that is where backtest is very, very important. As a forex trader, you must always backtest. Like, any small opportunity you see, you should always backtest. You understand? Because it helps you, it builds your confidence, and it builds your, like, it improves your eyesight. When you see your setup, you'll be like, oh, I've seen this thing before. You understand? And now let me give you guys this tip. It is very, very important. Normally I should say it's in the advanced class, but I will say it in this class. Understand? Now, in your own interests, it is just a simple advice, and it will help you. In fact, it will cut that long journey. You know, there's something like shortcut, there's something like long cut. You understand? This is just like shortcut I want to give you guys now. When you want to start trading, focus on just one pair. If you observed, since the time I've been teaching this mentorship, if you are checking the chart I've been showing you guys, it is just GBPAUD, just GBPAUD, because that is the only pair I trade. When you keep trading just one pair, when you trade it, you keep trading it, you keep trading it, it will reach a time you understand the pair so much that you know that, okay, when price reaches this level, or when it gives you some sign, you know that, okay, this price wants to reverse, okay, let me sell here, okay, let me buy here. You understand? So it just depends on how you relate with that pair. But if you are trading this, trading that, trading this, trading that, it will be too much. You understand? Fine, I'm not saying it is a bad idea. There are millionaire traders that started trading right from scratch, thousands of, or let me say many pairs, and they are still millionaire. And there is also millionaire trader that trades just one pair. Let me give you an example. You all know Jeffrey Benson. He trades just GBP USD and is a millionaire. When I say millionaire, not in naira, like in dollars. You understand? So I actually even got that insight from him. I was just watching his video one, like, back then. I saw him hammering on, you guys should just trade one pair. So I now focused on myself. Now, if you want to know how to choose the pair you are going to trade, like the single pair you are going to just keep trading, that will be given in my advanced class, or you should just probably refer to his video where he talked about how to choose your favorite pair. You understand? But let's just continue with our Fibonacci story. So now, I said many traders wait for zones to enter 50% or 61%. Now, we've drawn our Fibonacci level. Now let's see what price did when it reached the 50 level. Now, this is the, in fact, let's even take it from 38 level. You see that price tapped into this 38.2 level and retraced. You understand? Let's calculate the pips. Let's calculate the pips. If someone actually took this trade using just the Fibonacci something, can you see? Damn, this is about 88 pips just from the 38.2 level on the Fibonacci price. You understand? Just from that zone, this is about 88 pips. Now, when price traded into the 50% level, or so let me say 50%, 50.0 level, price dropped again, it retraced 50 pips. Now, price tapped into this zone. You understand? You know, I told you anything you are doing on your forex trading, you are not dealing with you are not dealing with like a key zone. You are dealing, sorry, you are not dealing with a key price. You are dealing with zone. So this 61.8 level, or let me say zone, price tapped into it and dropped how many pips? This is about 141 pips. Damn, that's huge, very very huge. 140 just using the key zones on your Fibonacci level. So now this is the first way of using your what is it called? Of using your Fibonacci. So now I'll give you guys this assignment. So you guys should put this down. Go to your MetaTrader 4 or MetaTrader 5. Open any pair at all. Now use your Fibonacci level to this using this first method. Draw it from the recent low to the recent high and identify the key zones and study what the price did there. You understand? Study what the price did at that zones. Then send me feedback. Send me message. Okay, take a screenshot while your Fibonacci level is on that zone. Then you explain to me. Please type it. Don't send voice notes because I might not have time to listen to it. Type it. Okay, when price reach this point, I've already explained how to calculate pips. You calculate, you tell me the number of pips price dropped when it's reached probably 50 zone or 61.8 zone. So you do it for about 3 pairs. You understand? Just 3 screenshot and explain. That's enough for the first method. Now let's go to the next method. The next method. So basically, how to use this next method is very very simple. Very 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 simple. Now, this is actually a premium way. Well, these things I'm giving you is actually meant for my advanced class, but anyways, it's fine. I'll give it to you. So now the second way of using this Fibonacci. Now, this might be kind of technical, but it's very very simple. Very 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 simple. Just calm down. There's something we call support. Supply and demand. Now, before I explain this second method, I will explain what I mean by supply and demand. So now, supply is a zone where sellers are waiting to sell the market. You understand? Put that down in your notes. Supply is a zone where where traders, where banks, where they are waiting to sell the market. While demand is a zone where bank are waiting to buy the market. You understand? Now, I will explain what I mean by that. Let me show you an example of what I mean by uh supply and demand. So now, let's say this is, so basically the first way we can have a supply zone. Are you listening, guys? The first way we can have a supply zone is when we have drop base drop. Now, it's very simple. Put it down. Make sure you are writing something. Make sure you are writing something. What do I mean by drop based drop? Let me give you an example before I show you guys on the real chart. So I'm coming. So all right. So drop. I'm coming. I just want to draw this. Okay, just give me a few minutes. Yeah, very good. So this is an example of drop based drop. Now, don't mind the color because I know the blue one should actually be red. In fact, let me change it so that it won't confuse you guys. The one on blue should be red. So it will be, I don't know why this chart is. Sorry. Okay. I just want to draw it to make sure you guys are like to make sure you guys understand what I mean. Yeah, very good. Now, this is an example of drop is drop. This is this first candle here, it is drop. Then this blue candle, it is the base. Then the last one is the drop. So that's why we call it drop base drop. Now, don't worry, I'll still show you on the chart. Then the second one, this is a supply zone. You understand? Let me label it. This is a supply zone. I told you guys there are several strategies. Some people just trade supply and demand, basically. There are some traders like that. They trade just supply and demand. You understand? Now, let me quickly draw this second one. I just have to draw it so that you guys will understand. So this is rally based rally. Don't worry, I'll still label it. Just make sure you are putting down something. In fact, you can draw this on your notes so that you can make references. Rally base rally. Yeah. Okay. Very good. Very good. So this is an example of a demand zone. Now, put this down in your notes. Your demand zone is also called rally based rally. You understand? A demand zone. Rally based rally. You understand? So basically, this is a demand zone and this is a supply zone. The supply zone is also known as drop based drop. You understand? This is the first kind of uh drop based drop. So now this is it. I hope you guys are following me. Are you guys there?
Yes, yes.
All right. So this first one here, it is the drop based drop. So now, if you want to bring out the supply zone, this is like this whole zone right here, this whole thing I've drawn. You can't just enter it because there are some that will be very, very big. You understand? So you have to filter it to get your supply zone right there. So now to filter it, let me change the color. You bring out the what is it called? The You bring out the what is it called, the supply itself. So this base is the what, is the supply zone. That base you are saying, this is the first candle drop, the second candle base, the third candle drop. So drop, base, drop. This middle candle is the base, and that's your supply zone. So once price trades into it and you see some kind of weak rejections, you can just enter for yourself. Now you combine, I've always told you guys this, you combine it with other things. Don't just see, just, I don't support the fact that you trade just supply and demand, support and resistance. Combine everything together, make it join all together. Let it give you that confluence. It will make your stand in the market stronger, you understand, rather than just using just supply and demand, support and resistance or whatever, you understand. Combine everything together and see your confluences and hit your trigger like that, you understand. So I've told you this point right here is the, what is it called, it uh is the supply zone. Now also for this second one, the middle one, this rally base rally, the first candle is the rally, the second candle is the rally, is the base, and the third candle is the rally. So rally base rally, this middle one is your demand zone, you understand. So price trades into it, then it buys, you understand. So now I've explained that. Now the second method you can have a supply zone or the demand zone is by your is with the rally based drop, you understand. Now rally based drop is a supply zone. What do I mean by rally based drop? I don't have to draw that, let me just show you guys on the chart. This is an example of rally based drop. So the market first went up, rally, this is the, this first move right here, this first move like this first move is the rally, the first move. Then this top that I labeled is the base. Then the second move, rally base drop. So that is basically your supply zone. Now your demand zone is drop base rally. Now let me show you guys that. Let me show you an example. Okay, very good. Now this point right here, this is drop, base and rally, you understand. So this base right here, this base right here is your what, is your demand zone, you understand. Let me label it. So that's a demand zone. And don't forget, I already told you guys this in the last class, the higher the time frame, the stronger the zone you are trying to hit, you understand. This is on the H4 time frame. So the support zone, or let me say the demand zone, will be stronger than the 30 minutes one, and also the 30 minutes stronger than the M15, which is the 5 minutes time, 15 minutes time frame, and the likes. So this is what we call the supply zone. Now I've explained what I mean. Now let's see what price did hitting the supply zone. Now this is why you should always combine your strategy with other confluence. If you are trading just one strategy, like, no, what, that's not what I mean. You can you should trade just one strategy, but if you are using just one static means of entering trade without adding some other confluence, you might always lose trade. Like, your winning percentage will not be so high. Now let's see what price did. This is a supply zone, right? So we are expecting price to trade into this zone, then we sell. Now price traded all the way up, then hits this zone. Don't forget it is a zone. Price entered into that zone, then it sold, you understand. always, it will always give some kind of weak rejection, except for news events. News events can always be manipulative. That's something about news. Understand? So now price entered into that zone and dropped. Let's calculate the number of pips it gave before breaking that zone. So now this is about 167, or let me say 165 pips that price dropped. So that is a beautiful setup, a very beautiful setup. You understand? You can go ahead and backtest your demand zone. You understand? You can go ahead and backtest your demand zone and send me screenshots. I don't want to make this class to be too long. So now, the same way I've explained this supply zone, go ahead to your charts, check for a demand zone using the drop based rally, and give me a screenshot of how price traded into it and actually rallied up. You understand? And you should calculate the number of pips. So that's the second assignment I'm giving you guys. You understand? So now, as I was saying, back to how to use our uh our Fibonacci. I said something about um I said something about the rally based rally, the drop based drop. Now, let me make a simple correction. The fact that I said it is just like the fact that I gave this analogy doesn't mean this is absolutely how it looks like. This thing you are seeing here, this point you are seeing here is a demand zone. This point is a demand zone because it gave us rally, then the base, then the rally. You understand? So don't be stereotyped to this form that okay, it is just candlestick, it can form or something like that. This is also a demand zone. Now, how do we use what's the second method of using the Fibonacci? So I will explain just this first method. Then you guys will go back and check for how to use it with the supply zone. You understand? So I'm explaining this demand zone now. So you guys will check for how to use the supply zone. That's the third assignment I'll be giving you guys. Now, to use this Fibonacci, so basically what we are trying to get is when are we expecting a pullback? When should we be expecting to buy the market using the Fibonacci stuff? Now, you check for the last candlestick on this what is it called? This base right here. You know this whole place is basically the base. So you check for okay, this is the closure of the last week before it rallied up. Which candlestick actually broke that weak point? You understand? So this is the candlestick. Now it is very simple. All you need to do, move your Fibonacci up to the week right here, then move the 100%. Now we are not doing recent low to the recent high. Now we are using the candlestick that closed below that point. Now very good. So now we are not using the 50%, we are not using the 68% or the likes. So what we're actually waiting for now is price to trade into 161.8 level, then we buy. So now as you can see, in fact without even saying any other thing, you can see price traded into that 161 level and it bought right here. Understand? Price rallied up. Now let's calculate the number of pips. Let's say someone took this trade. Let's calculate the number of pips the person would have actually made before the price actually reversed. So let's say you entered the price here. So this is about 126 pips. You understand? Soft. So this is a pullback. This is not a reversal. If it was a reversal, it will just keep buying up to the recent high. So there can always be pullback or reversal. You understand? This is basically how to use. Those are the two methods of using what is it called? Your Fibonacci. Now, um, 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 lastly, before I um call it a day with you guys, so I've explained the supply and demand in the two forms, which is the drop based drop, rally based rally. That's one. Then the drop based rally and rally based drop. That is two. Then I've explained how to use your Fibonacci, the two methods. So now I've given you guys some set of assignments that I expect you guys to submit this week before Wednesday, submit it in my DM. If I do not reply you, just give me a missed call on WhatsApp. I will check your DM after you've submitted it. So I need to make sure you guys understand what I've explained today. You know, I only gave you the analogy um for the demand, like rally based rally, when the price breaks it, for the second method of using Fibonacci. I gave you the first one. So now I'm expecting you to go ahead to your charts because I want you guys to backtest. If I there's I can actually explain the second analogy, but I want you guys to backtest because I know many of you, once we are done with the class, you just be expecting the next class without opening your charts, without doing anything. So I want to give you the assignment of going back to the charts and try out the second method. So if I now see that okay, you guys do not understand, then I will now make corrections and explain it better in the next class. So that's what I'm going to do. So now, lastly, let me explain what I mean by psychology level, or let me say psychological level in forex trading. That's very very simple. Now, psychological level basically is there are levels where market tends to bounce off. You understand? Where market tends to bounce off when they hit them. What do I mean by that? Psychological levels are just simply whole numbers. You understand? Round up numbers. Let me give you an example. Using this GBP, if I want to mark my psychological levels, all I need to do, this is the point. Now, if you are following this my cursor here, if you are following the price line, so now your psychological level is 1.86000. So basically all you are doing is adding 500 to the back. So if you add 500 to 1 point, okay, let me use my line chart, sorry, my line option. So let's say we are starting to draw our psychological level from this bottom here. So now what we need to do is bring it to, let me just make it whole number right here. Okay, 1.4000. So this is my first psychological level. That's if I want to start drawing it from there. Then if I want to add another psychological level, let me change the option. Then it will now be 84500. You understand? So basically they are round up numbers. That's why you're going to be adding 500, 500, 500, 500, 500, 500. Now, let me quickly give you an example of what price has actually done in some psychological levels. So these are just like little confluence. Although they are not little to some traders, they are very important. But me, basically, based on my strategy, I don't use psychological levels that much. But I just have to teach you guys, you understand? So you will know it. So let's see what price has actually done in some psychological levels. Let's say, and don't forget, they are zones, they are not points. You understand? The fact that we are making them round up numbers doesn't mean they are points, they are zones. Now, this is 1.88500. I can't be perfect to draw the 500, so that's why we are saying 504 there. So let me just okay, let's just leave it. Now, this is the zone. Let me label the zone. So this is the zone right here. You can see price was going up initially. When price touched that psychological level, there were hesitations. What do I mean by that? You can see candlestick with rejection. Understand? Let's say someone that trades psychological level, although I will never recommend you trade just psychological level. That would be so that would be a bad idea, a very very bad idea. You combine it with some other things. That's why you have to use confluences. Confluence is very very important. So now, let's say price entered into that 500, 1.8, 1.88500. Now, price dropped. Don't mind this weak rejection. There's something in trading. Let me quickly tell you this. When you are trading, you see some traders, they don't use stop loss. They have their reason. In fact, me myself personally, I don't like using stop loss. I prefer monitoring the trade than using stop loss. Why? Because there's sometimes before market actually goes in your favor, before market goes in your direction, just a weak rejection will take you out. It will hit your stop loss, then it will start reversing and going in your favor. And it frustrates traders a lot. Like it is very, very frustrating. That is basically why many traders don't use stop loss. Then when price starts reversing and starts going in their favor, then they probably set their stop loss. Although you as a beginner, it is highly recommended, very, very, very much recommended for you to use stop loss always in your trade. You understand? It just depends on how you set it and the likes. So now, let's say price is actually entered into that zone, it touched that psychological level and dropped. You can see there were hesitations. So price actually dropped about 106 pips, you understand? Based on this psychological level. If you go to other um charts, or let me say other pair, check for the psychological levels. So that will be the last assignment, the fourth assignment. You can go to any pair, take a screenshot of psychological levels, mark the psychological level and see what price did there. You don't need to submit that to me. Don't submit that. Just see it yourself. Okay, when price entered this psychological level, what did price actually do? See the hesitations, see how it broke that psychological level, or how it reversed based on that psychological level. So that will be preparing you gradually. When you start getting those things into your brain, like okay, psychological level, support and resistance, Fibonacci level, the likes and the likes. When you now combine it with the main strategy, bro, you'll be so hot. You understand? So it will make it much more simpler. You understand? Rather than just getting the real strategy before combining it with, although it is still actually the same, it just depends on you. You understand? So start getting it, start taking notes. Okay, what did price do here? What did price do here? Using what I've explained so far. You understand? So um I think you guys understand what I've explained so far. So I need you guys to ask questions now. Ask questions before I call it a day. Ask your question if you have any question now, please.
I have a question.
All right.
So I don't really understand what you said that we should write about the assignment. Is it how to apply the Fibonacci levels or rally based drop? I don't understand.
Okay. You understood the way I explained the Fibonacci, how to draw the Fibonacci and how to mark the point, right?
Yes.
Okay. Now the assignment is go to any chart where you can see like any currency pair, use your Fibonacci to draw just the first, like the first example I give, how to use the first method. Draw it using the recent low and the recent high, then take a screenshot and explain what price did when it reached each level. Let's say the 50% level, the 68 point something percent level and the likes. Explain what price did there, the hesitations, observe it and give me short explanation. So you do it for three, let me say three pairs. Then also for the second method of how to use the Fibonacci level, I gave you guys the first analogy, which is for the rally based rally. When price breaks the rally based rally, and we drew the Fibonacci level from the recent high to the candlestick that broke that rally based rally. Now, and I showed you how price hesitated and how price reversed, gave us a pullback on the 161.8 level. You understand? So I'm telling you guys to now go for the drop based drop using this same analogy. So I explained just one in the second method. So I expect you guys to give me the second form. You understand? So if I see that you guys do not understand, then I will now pick it up from there in the next class. I will explain it. But first, I want you guys to try it out so it will make you back test. So do you understand the assignments now?
Okay. But for me now, I don't have the back test.
No. No. Have you been following this class? Or is this the first class you are joining?
No, I joined yesterday now. My name is Miracle. Yeah, for the yesterday.
No. Like have you been following the class from when we started the class?
Not every day.
Ah, that is the problem. You have to refer to the videos I've posted. I already explained how to use the MetaTrader 5. and the like. So if you were in the class, you won't have issues. So just refer to the videos I've posted on my YouTube channel, then you watch them. So it will explain how to use your MetaTrader 5. Then that is where you get your Fibonacci. Backtesting is when you go to the charts and just a replica of what I've explained to you. Go to the chart and try to get it yourself. Like get your Fibonacci, put it on the chart on the correct procedure, then get see what the price has done on different pairs. That's when you're backtesting. You're backtesting what has happened already. You understand? But front test is when you are doing like front test is when you are doing what price is here to do. Like you are testing the market. You are trying to analyze the market even before it happens to see okay, you are testing your strategy or you are using it to place trade. So do you understand?
Okay. One more question.
All right.
Assuming you are on a train, right?
Okay.
And the market just break out your trend line, either break out the highs or break out the low. Are you getting me?
Sorry, I'm not getting you, please.
I said, whenever market break out your trend line,
Yes.
either break out the trend line at the high or break out the trend line at the low. You know, as a trader, we should wait for a pullback or retracement.
Yeah.
But assuming the market do not retrace, then start spiking, going up higher, 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 higher.
Okay, like what do you do then?
What's the next option to do? Because I have seen many things. I have seen that in marketing usually.
Okay, it's very, very good. Now it is of two ways. The trend line I gave you guys yesterday, if your market is going higher high, if it is giving you a bullish momentum, like it's making higher highs, you draw your trend line from below. You understand? You draw it from below, telling you that it is going up. It does not necessarily mean you are going to draw one at the bottom, then draw another one at the top. No, trend line is just to tell you that okay, the market is going bullish or it is going bearish. And if it is going bearish, you draw it from the top, like the high, the recent high, then the as it is following each other. You understand? So it's very, very simple. Now you are saying something about if price breaks the trend line and does not retest it. Let's say for instance the market is going bullish, is going bullish. Now price now came back to test the trend line. It's now broke it and now keeps tanking down without retest, right?
Yes.
Okay, now for every breakout, for every breakout, the percentage of the market coming back to retest that trend line is 80%. You understand? Now it now depends on when and where it will come back to test it. Do you understand what I mean? If price breaks it
I
today,
understand.
if price break that trend line today, it can test it in the next
Uh,
3 hours or let me say 5 hours. Understand? It now depends on the time frame you are. You understand? If price breaks it, it can come back to test it maybe in the 30 minutes time frame, in the H1 time frame, and the likes. But if you are just trading using the H4 time frame, you won't know that okay, price has actually tested it again. It is time for me to sell. You won't know. You understand? That is why top-down analysis is very, very important. Very, very, very important. You don't just trade using one time frame.
okay. I want to. Okay, I want to ask more question again.
All right, we have about just 5 minutes more before this call ends. You understand?
Okay.
So be fast.
Okay. No. Okay. Okay. No. Okay. Assuming you are using my for me now, I'm using daily time frame H4, H1. The 50 time frame is my entry time frame.
Now, with what you've told me now, it shows me that are you a swing trader?
Sometimes I swing, sometimes I scalp.
Okay, if you're a scalper, you can't be telling me you're using H4 time frame. That's a very, very bad idea. To scalp, you use basically 5 minutes time frame, 15 minutes time frame, in fact 1 minute time frame. And for swing traders, that's when you start using the H4 time frame, the daily time frame, and the H1 time frame and the likes. You understand? Now, even if you're a swing trader, then you take your trend line on the daily or the weekly time frame. You understand? So if you take it from the weekly or daily time frame, price will still come back to test it either on the H4 time frame or the daily time frame. It's not possible for it to just break down and just keep going like that. It will most probably always test it before it now keeps tanking and the likes. You understand?
Okay, okay,
Any other
okay.
question?
For instance, now, assuming you are using 50 time frame for your entry time frame or using 1 hour, and the price retest it in 5 minutes time frame or 1 minute time frame, can you will you enter the market with that time?
As for me, I'm a day trader. I'm an intraday trader. So I'm expecting my retest on, let's say, the M30 or the M15. I can't be expecting, although if price reverses and takes a retest on the M1 time frame, I will see it definitely because it is a lower time frame, so it will always show. Understand? But I can't be waiting for my retest on the daily time frame on the, sometimes it can actually retest on the H4 time frame, but the daily time frame is not always, it does that sometimes, but most likely, as for me, I'll wait for my setup and my retest on the M30 and the H1 time frame. You understand?
Okay.
Any other question? Any other question before I end the class? All right. If there are no more questions, I'll probably end the class now. Mr. Samuel, any question?
No, sir, no question.
All right. Mr. Timileyin. Okay. Since there are no questions, thank you for joining us this night. So we'll meet again next week, Friday, Saturday, Sunday, and that will be the end of the class. You understand? So make sure you do the assignment and submit to me on WhatsApp. And don't forget to join my recommended broker request. Link is in the description. And if you are watching the video on YouTube, like and subscribe. If you have any question, drop it in the comment section. And I'll see you guys in the next class. Peace.